So how have valuations for startups changed in the current PE and VC investments landscape? Would you like to throw some light on this?
People will talk about 15 to 25% lower valuations in the market, etc., etc. But I think, like Siva was mentioning, if you want to do a good investment, and obviously it is a two-way traffic all the time. It's not that only the startups want investments; the investors also want good companies. At that point in time, whenever you sit across the table and you are doing a negotiation, then whatever investments do come in will come at valuations which both the parties would typically agree. But in terms of the trend, yes, I will definitely say that the valuations have got impacted. There is no doubt about that fact. And I really hope that, as I said previously, that this trend should reverse soon. And, startups will start attracting money at the same kind of valuations they are kind of expecting. But it will be very prudent at this point in time to also have use of Rajesh on this, because, we are in extremely early stage, but they also do growth stage startups as well. So I would love to hear his thoughts also on the same.
Sure. No, I think more or less in line with what you're saying, Amit. It's no difference. Thankfully, when you look at the entire spectrum of technology companies in India and the money flow that's coming into this ecosystem, and I think you touched upon it earlier as well, the very early part of that ecosystem has not been as impacted as the late stage has been, And I think that's very obvious because the late stage ecosystem is very closely correlated with the listed markets. And we've all seen what's happened in the listed markets. So the fluff in the valuations and the whole euphoria in the ecosystem was largely concentrated towards late stage companies. And therefore, we've seen a huge, meaningful, just a second. Huge, meaningful correction there. But that's not happened. That's not happened in the early stage of the early part of the ecosystem. So deals are happening. I shared some data. Let me just put that up again, because what that shows you, not just about the numbers that came in, but also if you look at the other bars, not the bigger ones, the number of rounds, So if you see the last 2 years, 21, 22, they've both been more than 2,000 rounds of investment in the ecosystem, So that goes to say a lot. So even though per deal value must have come off, the number of rounds that happened is still remained constant. And even quarterly, if you see last few quarters, last 3 quarters, you see we are above 500 deals, number of rounds. So the situation is not that dire, situation is actually pretty good.
Right. And one thing on the valuation, because, these are early stage startups, they sometimes what they do, they came out with their own valuation without hiring a registered valuer. And they go to the investor and, sometimes they got the funds also. But when, they make all the filings with the Minister of Corporate Affairs, there they get a challenge because their forms didn't get approved from the minister because they have not got the valuation done from a registered valuer. So there they face a challenge. So, for all the startups who are with us right here, right now, so I would like to share that, you have to get valuation done from a registered valuer.
Yeah. See, Sandhya, if I may add to that, valuation itself, if you look at the history of financial theory and how we started valuing businesses, this whole DCF and all these things, they're about 60, 70 years old. So it's not a very old science, it's pretty recent. And if you look at valuations of early stage companies, it's even more recent, right? And as we all know that, even when you value a large listed big corporate like Reliance, Infosys, TCS, the bigger guys, as 70, 80% of science and 20, 30% of art. There is a lot of subjectivity that goes in there. 20, 30% is very relevant. When you come to our ecosystem, the early stage ecosystem, I think 70, 80% is art. It's a whole lot of subjectivity here and very little of science. But to your point of getting a valuation done, valuation exercise done and all that, I think it's very, very important. Not only for startups, I think it's important for investors as well. Yes. So from a tax point of view, whenever, if you're an angel investor on the call or you're a VC, etc., we all do get valuations done. And I think there's no point in cutting corners as far as getting a valuation certificate is concerned. Please do always insist on a valuation certification done by a merchant banker, etc., who SEBI is approved of.
Right. Absolutely.
I would say that, yes, as Rajesh rightly said, that it's all art. I agree with that, because the means, like, if you see any BSE or NSE company, valuation change every second when the price is changing. But when we are creating a model, the business model for 5 years, it has to also change like every second, but it cannot change because there's a lot of hard work which is going into it. I've myself prepared 50 models in the COVID times. Every day there's a lockdown released. The problem of the reagents and people not, we are losing contract, we are gaining contract. Every day valuation changes, but it cannot be transformed into a model.